Wow, Tesla, hello, up 22.69% in regular trading, up another 1.4% or so here in after hours. What a crazy day. Even for the S&P, this was the biggest day you've seen in decades for markets. From the pre-market trading low to where you closed today, you went up 12.62%, and that wasn't even the high of the day. It's closer to 13% if you're looking at the high of the day. My friends, in this video, we're not only gonna enjoy a drink of the Tesla tequila throughout this video, but we're gonna talk about what's coming next for Tesla, okay? And for broader markets, because I know it's been a crazy last 2 months, and things decisively changed today. Even in after hours, we had a speech from Trump. He signed some executive orders and gave us new details on some key questions that we have as investors. For an example, the China tariffs are done, according to Trump. Now, that could obviously change. He doesn't give a crap, but he's forecasting they're done for now. And this really changes the odds of a recession, of a consumer slowdown. Keep this in mind, guys. As the markets have been selling off, who owns stocks? Who owns the most expensive homes? Well, it's the wealthiest people in this country. Whether you like that or not, whether you are in that group or not, who cares? 50% of all dollars exchanged in this economy come from the top 10% of wealthiest individuals. Business owners, stock owners, homeowners. That's a fact, okay? Back like 2010, even 2015, it was like 30 to 35% of all dollars spent were from the top 10% of income earners. So theoretically, a market that's imploding and business uncertainty and all of the issues we've been facing recently have disproportionately affected higher income earners. If you're not in the stock market, I mean, you really haven't seen any problem from this whole trade war yet. Like there's nothing to be concerned with if you make $30,000 a year and can barely pay your bills. But that's not the demographic that really controls the economy. So recession odds are plummeting today, and we will go over that as well throughout this video. Now, most importantly, we should mention this is a short squeeze, okay? I had a lot of people in the last video say, oh, this is not a short squeeze. Like, forget those people, okay? They clearly don't know what's going on, okay? What happens when you get a 12.5% move on the S&P from the bottom to the top? It's expectations. Nobody was expecting that you would actually see a pause on these tariffs from all these countries. Why would you? I mean, almost every day you've heard, this is not a negotiation. These are staying on. They're going in effect. Like, they've made it a point to really shove that down your throat. So what have hedge funds and institutions been doing? They're bracing for a recession. They're, shorting stocks. They're doing their strategies, which have to do with shorting stocks, going long some areas. That's why you've seen consumer staples outperform growth, right? They've been shorting growth. Well, now with recession odds plummeting and these exposed firms to the downside, now they're getting smoked as the markets go up and as stocks go up. Especially a stock like Tesla. And you can see by what stocks moved the most today, which ones were most heavily shorted. If, you're thinking of Tesla, right? Tesla went up in after hours, close to 24-ish%. That was a lot more short than Coca-Cola or Pepsi or Dollar General that, relatively speaking, has been doing well recently. That's one clear sign of a short squeeze. But you could go through all the numbers if you want to. If, like Tesla was, I think, one of the best performing stocks in the markets today. And, it's been one of the most heavily shorted stocks over the past couple of weeks. Good news is if you're a bull, I think this can continue. And we'll discuss why that is a little bit more throughout this video. But first, we're going to take a shot of the Tesla tequila out of the Cozumel, Mexico shot glass that I bought for, get this, $1. I should have bought like 20 or 30 of them in like hindsight, just to give them away to people, because everywhere else we went after that, we went to Roatan, that's Honduras, we went a couple other places, and all the shot glasses were like $10, and yeah, I'm not spending thousands of dollars to give away shot glasses. Not even relevant to this video. Let's take a drink and get into the rest of this information. And honestly, tastes like you're drinking out of a bonfire. It is good though. I wish Tesla would come out with another one, another tequila here soon. Nonetheless, let me tell you the real reason why Trump pivoted today, okay? It's bonds. He doesn't care about your stocks. Remember this, okay? For the next 4 years at least, he doesn't care about your stocks. They caved because the bond market was starting to implode, and there was a real problem. And I think the logic behind it is, with tariffs that size, you're going to have inflation and you're going to have slowing growth, both of which are bad for bond yield. Well, slowing growth theoretically should bring down bond yields, but if you got an inflation problem and Jerome Powell's not budging and he's not going to cut rates and see through a inflation problem, then you're just going to get bond yields that continue to fall. In overnight trading last night, the bonds were blowing up. And I literally posted this. 10-year up 23 basis points. Whoa. Okay. Whereas you had all of your indexes down like 2%. Right? That was crazy. And this was around midnight. That somebody's getting blown up with bonds doing that. Okay. Banks, unrealized losses are exploding at that point. They had to do something to stop that. And that's what I really think today is about. Not necessarily saving the stock market, although that is a byproduct of essentially bailing out the bond market. Now, before we go ahead and get into all of the data that you need to know around Tesla, where I think Tesla is going from here and how long I think markets could actually rally for, there is some headlines that came out that you should know. Some from Trump and some from Fed Hammock that I think is interesting. First and foremost, this is a big one from Trump that will continue to be circulated over the next couple of hours and into tomorrow. Trump says, I can't imagine a further increase of tariffs on China. Yeah, I mean, it's already like a quote-unquote embargo. You almost can't do business with China. Now, in fairness, what China is going to do is they're going to send the goods, instead of going from China to the US, they're going to go from China to India. And then from India to the US and pay the Indian tariff rate. That's what they're going to do. So, again, as I said in the last video, it's not a huge deal. And I think that's why the markets are kind of seeing through the 125% tariff. And I really think the markets are imagining that China is going to come to the negotiations table, right? And there's going to be a good deal cut, as Trump says in this next statement. Trump says there's a lot of time. It's not a negotiation until it is. So he's basically saying it's now a negotiation. Trump says, I am glad the EU held back tariffs. Says TikTok is on the table. The deal is moving along. We're going to have to wait and see with China. I really think this tariff situation is all about TikTok. Like, what a great legacy would that be to solidify TikTok will forever be in the US, right? That's what this whole China tariff situation is about. It's about TikTok. China doesn't want to give up TikTok. So Trump's putting on the pressure. And we'll see. A deal with China is likely going to include a deal with TikTok, or for 50% ownership of TikTok. Trump says that he would talk or meet with China's President Xi. Again, that's hinting towards a deal with even China. Now, what's fascinating is Fed Hammock here. in after hours today had some huge things to say that came across the news wire in red here. He said, "We may move much more quickly when the Fed does adjust rates." That's not really what we've heard from anyone else on the Fed. And boom, I think this gives away the whole Trump wanted to save the bond market. Fed Hammock said, "The desk stands ready to engage in money markets if needed." Yep, that's essentially saying we're going to bail out the bond market if we need to. So all of these headlines, again, in after hours, are just feeding into the odds, if you will, of a deal getting done with China, this trade war just coming to an end, and deals getting done. From that perspective, recession odds are going to fall. You would think consumers would be more confident. You would imagine inflation shouldn't be a problem. You would think we're kind of just back on the disinflationary trend after all. And, well, where does that put S&P earnings? It's hard to know. Deals are not done. But we were at such a low level on the S&P and on certain stocks like Tesla that you really have to recalibrate all of that. If you were thinking recession before, those odds are lower. Like, I've had about a 60% chance of a recession this year. Following today, as long as deals get done and these tariffs do not go into effect the way that they are written, and I imagine across the board a 15 to 20% tariff rate probably drops recession odds to 30% this year. Not a guarantee that we avoid one, but not nearly as high as before. And as those recession odds fall, you don't want to be as short this market. So that's what you're seeing today. Hedge funds and institutions had to rush out, cover on short positions, and get more exposed to the long side of this market. And now, before we specifically talk about Tesla, look at the data for the day-to-day option activity, what the short position looks like, and where I think Tesla stock is going, it's important to remember that tomorrow you do have CPI. Although I see this more as like it could be a positive catalyst if CPI comes in low, but if it comes in high or meets expectations, I don't think it's like a catalyst, right? So I think you're actually set up really well for tomorrow's CPI report. Core month over month is expected at 0.3%. Last month was 0.2%. You want to watch the decimal here as well. You're not really expecting much of a decimal move. I believe last month 0.2% was like 0.23%. And I believe the report coming out tomorrow is like 0.26% is the expectation. So it's really actually just a small month over month change. Keep that in mind. Year over year rates are expected to fall from 3.1% last month to 3%. Headline month over month is expected to remain roughly stable at about 0.2%. And year over year CPI is expected to be at 2.6%. Now keep in mind, Trump yesterday was calling on Jerome Powell to cut rates, that inflation is gone. So I'm sure Trump knows what the CPI report roughly is going to look like. He probably gets that report alongside Jerome Powell a couple days before it comes out. And maybe that's letting you know that inflation is probably going to come in low tomorrow. Although with Trump, you can never be too sure. So I do see it as a potential positive catalyst tomorrow, and nothing burger in the worst case scenario, right? Because if inflation's high, then people are going to say, well, next month it should come down. The seasonality of the first 3 months of any year tend to be higher. Companies were getting ready for tariffs, and now tariffs are canceled for the next 3 months. So you could see how people could wish away or wash away a bad CPI report, whereas we might like a good CPI report. You could definitely see that. Initial jobless claims are expected at 224,000 tomorrow, up from 219,000 last week. Again, don't really think that's a huge catalyst either. You have Fed Logan that speaks at 9:30 in the morning tomorrow, and Fed Goolsbee that speaks around noon tomorrow. So keep that in mind. On Friday, you are going to have Michigan consumer sentiment. But again, following such a dramatic shift today from Trump, and now he's willing to negotiate, I don't know how much of a catalyst that is going to be either. Again, just all things considered. Now, switching gears to look at Tesla here. Again, Tesla, one of the most heavily shorted stocks in recent months, really the last month or two. Overall sentiment has been very negative. Auto companies are just one of the worst places to be during a recession, especially high beta and high valuation. I mean, nothing was going right for Tesla from that perspective. Okay, like there has been nothing positive. Now, there's been positive news for Tesla, just the environment that we've been in has not been a good backdrop for Tesla. Hopefully that makes some sense. Let me know down below in the comment section if that just went right over your head. We had 247 different trades today, totaling about $400 million with a positive order value of 75%. So definitely on the strong side. But look at that. You had almost 3 million shares today that were covered on. Here's the kicker, though. There's 82.2 million shares that are still sold short. Now, if we look at the official reports, one was released today where you have 76.46 million shares. Even if you take 3 million off of that, you're still at 73 million. Where you were at the end of January was about 60 million. So you could still see 15 to 20 million shares pretty easily that need to be covered on. Now, that can be, substantial to drive Tesla higher. And I do think that's ultimately what's going to happen. There's going to be a lot of volatility. But typically when you get a big day like this, you tend to get more good days, right? Tesla doesn't tend to be like a one and done kind of stock. Last time we had a really big day like this was November 6th. Maybe we had some other big days too. This was a 5% day, then you had a 12% day. But November 6th, you were up 15%. Next day, you were up 3%. Next day, you were up 9%. Day after that, you were up another 9%. Like anytime you get these big days, you tend to have at least one more big day as well right after it. Obviously, you could probably find some examples where that didn't happen, but that's just what tends to happen. You had a 6% day here, boom, you had a 10% day, then you had a 6.5% day. It's because Tesla tends to just be, again, a heavily shorted stock. When things are going wrong, they're going really wrong, everyone's shorting. When things start to get a little bit better, then everyone jumps ship basically at the same time. And literally, like every time you've had big days, you tend to have multiple good days in a row. So I would say from a historical standpoint, you wouldn't want to bet against Tesla here. Now, we have 90 days of a pause in these tariffs. Doesn't mean that they're not going to come back, but I do think that sets us up now in a positive catalyst environment for markets. Now, you've already gotten back up to your 300-day moving average. I think getting up to the 200-day moving average is in the cards here. That is sitting at about 570. So that would be upside of about $22 on the SPY. Roughly upside of about 4%. So you definitely did price in a lot of that, good news today. But I think there's plenty of room to continue to move higher. Again, considering recession odds have plummeted. And for Tesla specifically, I mean, you're still down so much. It wouldn't surprise me if Tesla gets back into that 310 to 325 area. I could see you above the 50-day moving average at $297 and below the 345 level. Somewhere in this range is my expectations. Could you get higher than 350? You could, but I think you'd really be exhausting the good news at that point, right? We still have to make sure Tesla launches the lower, cheaper priced Teslas. We have to, make sure Robotaxi goes off, hopefully without a hitch. There's still some catalyst specific to Tesla we're waiting for before I think people really get bullish on Tesla again. So short term, the next couple of days, I could definitely see more upside from here. But you do still want to be a little defensive because you never know what Trump's going to do. This does feel like, although, a major policy pivot on the trade war. Not like the first even pause of tariffs we had. What was that, 30 days? This feels like a more definitive, hey, we're pausing because we put the pressure on. Countries want to negotiate. The first time around, I don't think countries had any idea of the kind of tariffs they were looking at. You hit, Cambodia and Malaysia and Vietnam with 40 to 70% tariffs. All of a sudden they want to negotiate. Before, you were telling them you're going to give them a 25% tariff, and they were mad about that, right? So the tide's definitely turned. This does look like more of a definitive, policy U-turn. But hey, anything can change. Ain't that right, Emerson? Say right, Daddy. It's not gonna say it this time. Go figure. But yeah, that's kind of my expectations. I think markets as well extend to that 200-day moving average. Getting higher than that, though, I mean, without having clarity on what trade deals are going to look like, could be a bit of a stretch. So keep that in mind as well. Ladies and gentlemen, let me know your thoughts on all of this down below in the comments section. Have a fantastic rest of your day, and I will see you in the next one.